Hi, I'm Tom Lydon with ETF Trends here in Washington, D.C. at the Charles Schwab Institutional Conference, here with Jillian DelSignore, Executive Director, Head of ETF Distribution, JP Morgan. Great seeing you, Jillian.
You too, Tom.
Yeah, there's a lot going on as we wrap up 2018. A lot of moving parts, a lot of moving markets. Let's talk a little bit about the challenges on the fixed income side, because at JP Morgan, you've done a good job tackling that.
Absolutely. It's been something that's come up in so many of our client conversations this year. How can advisors really grapple with what's going on in the fixed income markets? We're finally seeing those rising rates that we talked about for so many years. And advisors are looking for a way to shorten up duration. And so one of the most successful conversations we've had this year is around JPST, our ultra short duration fixed income ETF. There's really almost a dual use case. Somebody who's trying to pull in and shorten duration in a portfolio, or take that one step out from cash to earn a little bit more on what they had been holding as cash on a portfolio by taking that one step out in terms of a risk profile to earn a little bit more on that.
Yeah, and that little step means a lot yield-wise, because cash isn't paying anything.
Absolutely, and so we've seen a lot of folks do that, but also the opportunity to, if you look at JPST, you're getting about 70% of the yield of the ag for a fraction of the duration, less than 10% of the duration. So it's been a really great story for advisors who were looking to pull that in, but not lose a lot of the yield that they were getting.
Yeah, absolutely. Well, also, you folks have done a great job on the factor side. Not only individual single factors, but also the multi-factor strategies. Talk about that, and what does that mean to institutions and advisors?
Definitely. So one of the things that I think is really exciting is to see the track records that our multi-factor ETFs are finally achieving.
Yeah.
I think we talked for so long about the newness of some of these strategies, and here we sit with JPGE, our global equity ETF, over 4 years old, and JPIN, our largest multi-factor strategy, at over $1.6 billion at almost 4 years in age. And so we've been able to see them react during real life market scenarios. And what we're seeing now is, in this new spurt of volatility, is these products performing exactly as designed. So being able to provide that lower downside volatility, while again capturing a lot of the upside that we've seen in markets, but particularly in international markets where we've seen volatility really pick up in the last couple of months, seeing that ability to really cushion a portfolio, if you will. And so that's become a very large part of the conversations we're having with clients right now.
You know, I've been fortunate enough to be in your offices in New York, to hear from your executive portfolio team, to get your reports, those monthly reports that are updated on a regular basis as far as a snapshot, as far as what you're seeing, and then translate that into what factors are working now. But then most importantly, if you don't want to be the one that's selecting the factor allocation, you can come to JP Morgan with that multi-factor strategy, and you folks can do it for them.
That's exactly right. So we have our factor views, is what we're talking about here, that Dr. Yaz Ramahi, who's the CIO of our quantitative beta strategies business, who manages the multi-factor and single factor as well as alternatives ETFs that we have. And so they have these factor views. So to your point, if you do feel like single factor is the way that you want to go, which can be very challenging because they're very cyclical, just like other asset classes, or if you'd like to have JP Morgan and the expertise of Dr. Yaz Ramahi and his team to make those selections for you, we have our multi-factor strategies. And we do that across the globe. So in the US, large, mid, and small, international, emerging markets, all performing exactly as designed.
Yeah, well, the greatest thing is this evolution of the ETF space. You and I have been at this for a while, and we've really embraced the pure traditional market cap weighted pure beta strategies. That's great. But you know what? Today, if you take the S&P 500 and you put it through the grinder, not every stock is going to come out the other side. So with factor strategies and even designing allocation to these, it's a smarter way. And as advisors and clients are a little concerned about returning to normal times of volatility, I know you're talking to a lot of people about it.
We are. I mean, there are, as you mentioned, there are challenges that come with market cap weighted indexes. They certainly can have a place in a portfolio. But we find that advisors more and more are interested in learning about ways that they can be a little bit more thoughtful about the way they're constructing portfolios. So not only are we having conversations around how can you reconstruct that traditional index, like with multi-factor, and use that in a portfolio, but it's really about where does it fit in my portfolio. So you say you've been to our offices. One of the things I know we've talked about is our portfolio insights team. And so this is our group that really is there to do a diagnostic with our clients around portfolio construction.
Yeah.
It's not just about what does this fund do, it's about what does it do in my portfolio. So if I were to add a JPIN, what does that do to my overall portfolio? If I add a JPST, what does that do to my overall duration?
Yeah.
So that's really taking up a lot of our time, particularly as folks are repositioning their portfolios in this bout of volatility and moving into 2019.
Well, and you talk about evolution, the whole distribution process has evolved where it used to be in the mutual fund world, you talk to an advisor and try to sell them a mutual fund. Today, as you point out, as an advisor, you can come to JP Morgan, you can say, lay out your portfolio, here it is, and what would it look like if you put a multi-factor strategy in there? And take it or leave it, right?
Yeah,
and
it is. Well, I mean, it's a very active decision, right?
Yeah.
People are making, whether it's a passive investment option that you're making, it's an active decision that you're making, and it's a very important one. And so we want to be able to leverage the expertise that we have at the firm, not only in portfolio management, but portfolio construction, to help advisors understand the implications of adding and tweaking and changing up portfolios in a way that's helping their client achieve their goals.
Absolutely. Jillian, as always, great seeing you.
Likewise.
Thanks.